Good morning. Welcome to today's session where we talk about Euro USD. If you have observed me closely, I've stuck to one pair. And really, if you want to do well in this business, you don't have to master more than one or two pairs. When we talk about correlated pairs, we talk about pairs that the other half of it, it's when it's almost the same thing that against the other one. So what I'm trying to say is that, for instance, if you have pairs that has a US dollar trading against US dollar or with US dollar, so anything at all, they are correlated pairs, and they are likely going to move about the same way. AUD USD, it has US dollar, Euro USD, Pound USD, New Zealand, that's Kiwi USD, USD JPY, Japanese yen, USD Canadian dollar, all these pairs, even including gold, SAU against US dollar, or silver against US dollar, platinum against US dollars, they tend to behave in almost a similar pattern. So when you are trading and you are putting two of them, three of them in a trade, you are duplicating, triplicating your risk. And you're not going to make more money that way. You are going to make more losses. You will make money if it works out, but you're going to make more losses. If you're going to divide all these lot size in 5 places, why don't you put it, if you have the money, why don't you put it on one pair and you will still make your money? You will soon realize that it's because you don't know what you are doing, and you are hoping and wishing that trade will move this way and it will deliver you goodies. That is what makes you do it. Or that you need money quickly. That is what makes you do it. You don't need money quickly. I know you have a need for money, but the quick sense of it, because you think maybe there's volatility here or this or that, it's going to move very fast. The way it moves fast is the way it's going to burn you. So why don't you pay attention to something that is most important? And what is most important is that you know that this is what price is going to do. That you can figure out that price is going to play out this way. And at those spots that you know this is what price is going to do, if you know that what price is going to give you is 40 pips, why don't you trade that 40 pips and make your money? What you have to ensure is that you have mastered wave, you have mastered structure. When you have mastered wave and you have mastered structure, and that you know most of the time, in about 90% of cases, you have predicted from the chart and the wave that this is what price is going to do, and you are correct almost all the time, that is what gives you the confidence to say, okay, at this point, I'm going to come in and I'm going to get out at this point. Oftentimes, what you do, for most people who have experienced trading, either live trading or demo trading, you have experienced that most of the time you win money. Sorry, a few of the time you win money and you labor winning those little money that you make. But most of the time it ends in losses. And if you question yourself that Have I made more losses than gain? If your answer is yes, you have to stop what you are doing. That means what you are doing is not going to work, is wrong. When you make more losses than profits, and overall, on the aggregate, is losses, then something that you are doing is not working. That means you don't know how this thing works. And that's the more reason why you now have to make sure that you want to be in the class that I'm offering to, to give, to really understand how this thing works. If you are telling yourself that this thing does not work, there is no way you can gain in this thing, I can tell you for free, that is a lie. Oh, if you think reading the charts and the wave is difficult, very, very difficult Aquilian tax, maybe you are right. But the thing is this, by the time I take you through and you understand the ways this thing works, then you ask yourself, is it like this simple and easy? Because over the years, I've come to realize that this is the behavior of the market and this is what the market does. And there is nothing unusual that I will see that I have not probably predicted that it's going to be like that. Price does not work in a straight line. Yes, even if you know it. But do you have the patience? You don't have the patience to study the charts and the wave. And when you read 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5 waves and 1, 2, 3 waves and flat and all of that, yes, you read it and you understand what you have read. But when it's in the process of formation, you don't see it. You don't see it. And what it's all about, what this trading is all about, is how do you quickly know from the information that has formed so far, from the first, from the second, to piece the third, and perhaps to piece the fourth move or the fifth move. So you have to use what had formed to piece out information of this is what is going to transpire or happen. And for those who are on probably YouTube, I mean, my Telegram group, now they understand how this thing works, that, oh, we've missed so much, and they are learning, they are happy. I posted about 3 videos yesterday alone on that group, 3. And I try most of the time to update by charts every day, or, post video every day, or not every day. But the charts video, we've been communicating, we've been teaching, every day on that group. And they are the ones that can tell those who are on WhatsApp up that what they are gaining in a week, I think I will wish that they do that for you, that what they are gaining in a week compared to the video I sent of an update once in a week, which one is more helpful and how they want to grade it, because they are the ones. So if it's coming from my mouth, it's like it's just coming from my mouth and you can't relate with it. But you may be able to relate with those people that are testing and are seeing things much more better than, okay, there is a whole lot of difference in me looking at weekly charts or weekly video, than we are now going through the process of formation and completion of all these charts and waves and all of that, and the way you are counting your wave and you are missing your wave and count and all of that. So it's all about that. There's one thing again I want to tell us. When it comes to, you see your account in red, you are patient to wait until this account can turn to blue because you don't like to lose. Now, once your account turns into blue and you are seeing blue, you are impatient because you want to make money. I don't understand. In losses, you are patient, painfully hoping that it's going to turn blue. Even when it dragged so low in negative, you are patient. Now it's blue. You are not patient. You are impatient. You want it to get to destination or to get to coast. It's all about, what I'm trying to say is all about you changing your perspective, working on your psychology, working on how this thing works. Where in a place in the Bible, it says, oh, it's much easier for a camel to pass through the eye of the needle than for a rich man to get to the kingdom of God. You know, the eye of the needle itself with the camel is not an easy thing, very hazardous. Price, the structure tells us that this journey is hazardous, up and down, serious up and down. That's the way the price will move, serious up and down. And you must look at the chart that it's always like that. Price will get to a place that now what they want to do is to do up and down structure. And they can do that for 1 week, 2 weeks, 3 weeks, or even more before they break out of it. You must be ready for that. Would you be impatient to close because price is doing that? You must have known that price is going to do that, and this is what is playing out. So don't be impatient. Wait for it. This is the structure formation in front of you. So when you understand that, oh, it's all about, so it's normal that price would do that, then you wait. The trend lines, your support and resistance will not help you to know where your TP and all of that. They talk about risk and reward ratios. But one thing you must know really is that when you understand your wave and structure and all this pattern, what is going to happen at the end of the day is that it helps you to be able to pinpoint your entry levels. It helps you to able to draw your stop loss. The structure will tell you that what is happening here, maybe on 15 minutes time frame or 1 hour time frame, if price is going to play like that, oh, it's going to be like this. This is where your stop loss is going to be. Now, that stop loss will change when you are talking about 4-hour time frame or daily time frame. So, and that is one thing that they are now understanding, those on that Telegram group, that the way the stop loss can shift or change based on the structure on the higher time frame. And again, it is also the structure that can give you an idea of what or where your TP is going to be. I think I shared a video yesterday and I said, the best approach to trading really is this. Where is the trend? Now, if you are trading in line of the trend and it's confirmed, there are trades that you will continue to make. You make the first entry because you are in that trend, which is confirmed. You won't change your stop loss. You will change it based on the structure. And the structure, based on the structure, you can have probably a working TP, take profit. I will call it a working take profit because it can change. If we are in a trend and we are on wave 2, the best thing to do is to say that, can I leave my trade until wave 3 is done? The wave 3 on the higher time frame, not on the lower time frame, maybe the daily time frame. Can I leave my trade until wave 3 is done on the daily time frame? Now, if we can do that on the daily time frame, the approach is that at a level when we make entry, probably between 80, 100 pips, or let's say between 100 pips and 120 pips, higher from that entry, when we see another point of entry, we can put another entry there. When we move higher and we see an entry level, we can put another entry there. So that means we can have multiple entries without relinquishing those positions, without taking them out, because we are trending. The only thing that you want to do, because you don't know where that wave 3 is going to end, the structure can give us that, okay, at least we expect 161.8 of the daily extension to say, okay, this is at least where you're going to have your wave 3, which could be a working take profit. So if that is your working take profit, the only thing you begin to shift since you have entered is to now shift your stop loss based on the structure that is forming. And when you move your stop loss at some point, those entries that are lower, if you are buying, will get to a point that is now, your stop loss will be positive, which means that if price should even come and hit it, it will not be negative again. You are not carrying a risk on those ones. And that should be the right approach or attitude to, entries and positions that you are opening. Now, when you get to where wave 3 is going to terminate, you now look at those levels or positions that are very close to where it's going to terminate. You can now relinquish them at the summit of wave 3. When you have the internal correction of wave 4 and you want to do a wave 3, you can relinquish them at the 5, of wave 3. Then you wait for those ones that are very lower, that after you have done with 4 major, you can relinquish them somewhere, in wave 5 or 5, or very close to it. That way, you would have maximized your trade. Of course, you don't want to wait and just to continue to manage just one trade from the onset. And that's why you have to add positions. But adding positions and the technique of adding position is what I'm teaching on the Telegram group. And these are things that you can't get on just weekly videos that I post. So I need you to know that weekly videos are just meant for those who also know about it. We talk about what is happening, and it will always be right to say, this is the way we are going. But I haven't said that about trying to trade alongside of the trend. Now, we will be trading, and we've been trading both ways. Now, we are going to be, probably if you are buying, that is the trend. We sell at the same time. So you now see us buying and selling, because we know what we are doing. We are selling at the points of pullbacks. We are selling at the points of major corrections on the lower time frame. We do that because we know if we sell, it has given us a sell setup. We'll sell to relinquish those positions. Like during the week, of course, we've been buying, and I placed a sell for them. I said, we are going to sell. The price will get to this point. This is the blue box for us to sell. And at that blue box to sell, we are going to sell. And this is the area that we are going to, take profit for that sell. The price pierced it, pinpointed precision, took they sell and began to go down. They can tell you if it didn't happen like that. They can tell you pinpoint, and it went down, got to TP, it took us out. Then we had that TP. And then we waited. The price went down after structure completion to pick another buy. So it's like that. So those short positions that we can probably in 2 days, 3 days do, pull back sales and all of that, while we are leaving the long-term positions for the trend. So we leave the trend to go on, because most of the time also it's very difficult for us, for you, because when you don't know, and finding an entry might be trouble for some, because your mind, your emotions begin to run and run and run and run, and you are missing entry and you are missing entry, because what you want is, okay, now we are in it, then we are going. We don't want this thing to come back down. We want it to continue to go, and I want to see blue, 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 blue. You must understand wave, and you must understand why you are seeing it like that, and it's moving. Oh, maybe it's gone into like 100 pips before of profit, and now it is going into negative again. And you're not saying that if we know that it's going to do that, why didn't we take it out? Most of the time, you can't predict that it's going to do that. It's the structure that is forming that will make it okay. The structure tells me it might do that. And you might not see it on time that it's going to do that. There are ones that will see, oh, it's going to do that. And if it's going to do that, it's going to pull back. If it's going to pull back, it may be a big pullback. Do I want to really leave and relinquish position? Why don't I wait? After correction, it's going to pull up again. So we make decisions based on that. So, and that is one thing. That is what to note, and the style of trading that we are embarking upon, to leave our positions for long, adjust the stop loss until we get to where we want to relinquish, and we'll take a counter trade, which will be short trades when we have the opportunity and when we are sure that that is what they are doing, because it's going to be on a shorty. You don't want to take a short trade when you are trading against the trend. You are going to get bumped if you don't know. Now, enough of, I've said a whole lot preaching this morning. I can call it preaching, but at the same time, wanting you to know. So, in the past 2 weeks, price has been choppy. This is what price has been doing for the past 2 weeks within this zone. And this is just correction, okay? This correction. And right from April 23, April 14 till date, that's 2 weeks really. A bit, yeah, 2 weeks, yeah, about 2 weeks. Price has been choppy for 2 weeks, not really moving more than how many pips now? Let me see. Price has not done more than from the height here down to this low here, not up to 200 pips, and that's even 150 pips or thereabout, or 180 pips was just within the first 2 days here at this junction, about another 2 days or so here, but largely most of the days is in between here and in between here where price has been choppy. We know that we've been on uptrend on Euro USD, but we should know some things, how we also try, because the price action will only be important if it's falling at the limit of the structure, where the structure tells us something would happen. Like, for instance, this price action. This is a price action falling at this structure. I did tell them, before we got here, that after this move, we came down, we got to this point. This is what we are seeing. I explained to them. In fact, I had to be sending more than 2 videos yesterday to explain that this is the level the price is coming. I think I did a video around this point. Around this point, I was telling them, or around this point, I was telling them that what I can see, price is not going to go beyond here, and price is going to turn up. And price did that against all odds or expectation. because people will be thinking that, oh, this is an engulfing candle, and look at this candle here, and this volatility. Why can volatility be like this? They're selling, and they get to this point? I told them at this point, they can tell you again if I didn't say that at that point, price is going to pull. And exactly at that point, price touched and we had reaction to the upside. So, and that's power of wave and analysis and structure that you understand. So you discover that if we made a precision and we got it right, it's going to be at that point that we move. So it's not as if, price is now going to move majorly against us, except if we thought that breaking out from here and price is just going to continue to move higher and higher. And, you know, if you put a buy stop and they're now moving against you, so that also can happen based on structure. Now, what do I think? Before I tell you what I think, we want to see what is the, because this month is closing on Sunday, which is on the 30th. What are we going to get from the price action, the monthly price action? That is very important. Let's go and see what monthly price action is going to get us. Now, if it closes like this on Sunday, you know, that's a bullish sign. And perhaps if it comes a bit further up like this to give something like something like this here, this one, with probably the tail will be shorter anyway, but something like this, almost full bar, you know, that will also be a good price action that we're still going up. Though what we've been doing is a correction here, okay? So it might mean that we are going up. But so we should close bullish. So if you close bullish, then with the price action, we know that we are going further up. On the monthly, it will be good. So if you push up a bit, it will be good. Now on the weekly, so we are still bullish on the monthly. So this cannot just turn down in 2 days and turn into a bearish candle. Is not possible. Now on the weekly, so this is what we are seeing on the weekly. So it's been more of like a corrective and all of that. So if you thought of what they taught you on price action and all of that, you say, oh, this is like a doji, and you know, it is an hammer. Maybe we are coming down. See what price did the second week. So it's only a structure that will tell you this is what is going to happen. So it's only structure. So we can see that from structure. It's not, we don't work on trend lines, support, because if you are talking of support here, look at support. Your support is here, you know, where you have this, the base of this candle. See, this one went below it, broke it. So, and you saw this hammer again. Maybe we are going to sell. Price went up. So the structure confirms that the price action here is valid. Is the structure. Is the structure that tells you, okay, your support and resistance here is good. Without the structure and the wave, forget it. Forget it. So that is one thing you must know. Now, this is the structure here on the weekly, and we are breaking out of this structure. So you can see, breaking out of this structure, that is why also price will be going on up and down, because we are breaking an important structure here. And price is not just going to back down from this structure now. That I can see, we are broken out of it. So we have done several retesting around that structure that has been broken here, and we're trying to go up. But in our attempt to go up, there are other fib level that we are aware something may happen. So we're going to be watching those areas. I've shared that in one video. So let's go to the daily. So from the daily, so we can see, this is, we're not selling anymore, but you won't see that we are not selling anymore. Now, the daily structure, if we are going to have a major change, you know, I said in one video that we are looking at, perhaps we are going to do a daily correction. This eventually turned out to be a daily correction from here down to this point. And this would have been a wave 2 or a wave B. And where from uptrend that we had here is a wave A, and this could have been a wave 2 or wave B. But this is not really complete for what we know as a wave 2, but it could pass for a wave B, but not for a wave 2. Now, why I'm saying this is that what we know is that from here, where this wave started from this point, we should probably have at least had about a retracement of 50%. This thing didn't get to 50%, and we didn't take out this structure here, the structure that is here, where I put this here, my finger there. We didn't break that structure. If we had broken that structure and price went a bit up, we know that we're coming back down again. But because we didn't break this one, price began to break structure to the upside. So the first structure was this to the upside in the daily. The second structure was broken, and this structure that has stood here for some time also got broken. So we know that now price is going up. So because price is going up, price will not just turn down, because price had changed configuration. Instead of doing an ABC to the downside to give us at least a good retracement, we didn't have that. It was shallow, but price may on the daily do an A and a B to the upside, do a C to the downside, which could even break this structure. We are aware of that. Something like that happened yesterday. I was explaining to them why price had to do that. So have that, those that I explained that to, have that at the back of your mind, that as we project and move further up, price may react on the daily an extension of this wave around 123, 127 fib extension. We could have reaction and price may begin to turn down and do a daily correction that will take the price below this level. And if it takes the price below this level, it does not mean that price has changed trend. So it means that once we get a reaction, all our low positions, we might consider closing them, because we've been buying. And because I know if that happens, that may actually erode all these and still put us in the negative before price turned up again. So we are going to be waiting. But again, price may do something and accelerate and be more aggressive. What would tell us that price is not going to do that? We're going to be looking at daily structure from time to time. Now, in terms of looking at this structure, I want us to know what a daily structure is. This is a daily structure here. This one is a daily structure where we have a move down, this move, and this move to finish this structure. So the low here is a structure. Then we have an acceleration to form another structure. This is another structure here that came down. The low of this is another structure. Price went up again, did a little correction to form another structure here. Price did this, another structure was created here. Price moved to this point to create another structure here, so another low here. So if these are taking this structure here to the downside, then we know that, see, price may be going down to do a correction and pull more below and break this low. But we didn't get that. We didn't get that. I would rather want to see a situation whereby price gets to those fib level and react, because price will not just react at the break of this structure, because the structure and the fib, the wave, does not really confirm that price is going to do that. I will want a reaction, to see a reaction around 123, 127, or around, before we break, 161.8 extension of this, 1.618 extension of this. So that is what we are looking at on the daily. So the day we go up and we break a daily structure to the downside, know that you would have to plan to relinquish and close all those buy positions, because there will be tendency for price to If it occurred at those areas or those levels I talked about, we might have to move all the way down then to plan another. So once we are now going up, it's going to be explosive. It's going to be explosive. The movement so far has been kind of slanting and has not gained momentum. So that also looks more like a B wave to me than the third wave. Those who have been on Telegram will understand what I'm saying, because we've seen something like this for B wave that will just be going up gradually like this. Not until it picks momentum that qualifies, you know, a wave 3, then we won't regard that as a wave 3, but we are keeping the option that it could be a B wave of a daily correction that we want to terminate, or, you know, when it picks momentum and break those structure up, then we now say, okay, this is now, you know, wave 3 that we are doing. But from the way it's dragging up on the daily, see the move here, quite sharp, you know, quite sharp. You want to see a fast movement to break out of here, out of this structure. It's supposed to accelerate to the upside, and we have not seen that yet. We are going to wait and see that. So I've explained a whole lot for you to understand about the possibility of this being a B wave to this being an A wave. So you must hold that view, and until we cross those barriers, we may still come down and break the structure to the downside. If we do 123, 127 might not be helpful, really might not be helpful for the structure so far from here, because what would happen is that probably you pick this low again, at if it's 127, 123 of the B daily. I think some people now understand what I'm saying. But if we go above 123, 127 before we see a reaction, and that may actually take the price lower than that. Okay. So now, having explained that daily structure that we expect to break from the top, that will signal, and those people level that will signal that, yeah, we are going to go all the way, then we'll relinquish positions. So now this is what has given us this potentially a B, why this one's an A. So let's go to 4-hour structure and see what is happening there. You are seeing, you think it's a sell here. It's not a sell. We are going to break above here now. That is what I can see. Now, this is exactly what I told them. Exactly what I told them just now. That we have a break, like a wave, to break this structure to the upside. We had a correction here, and we could have thought that, oh, this is an A and a B. We didn't, in fact, we were thinking it's an uptrend, because after the break of structure here, we put a buy stop. And after the buy stop at this level, what the price has been doing is walking crisscross around the buy stop, and everybody was like, okay, freaking out. What is happening? Why is it not continuing like that? Now, see the way this one had moved to the upside, and eventually it turned out to be a B, and we had this to the downside. We thought it's going to be, you know, if you had a sharp movement down to the downside, we should be expecting that it's going to continue, at least give us an 100% of this move, and to come down to form wave 2 proper, you know, of that move. So if it came down and gave us a wave 2, like here, you saw this is a running flat here too. This is a running flat here, a wave A and a wave B and a C to break structure. Then we had, after breaking structure, we have another triad, a wave 1, is A B in the middle, and a C. Then we projected more forcefully to the upside. Then we have an A B, and a C to the downside again, of A to make an A. So this is one became more complex, and we had maybe a 1, a 2, that this one should be going to do a 3 to break up, but eventually it wasn't like that. So of course it's normal, you can think like maybe it's going to do that. You wouldn't know that this one is going to form. So you are going to be decoding the wave and structure as you are saying it. So eventually it now did, for the inside of the B, a wave, a B wave. Now did this in 3 wave also, A, B, and a C. A, B, all this in the middle, a B and a C to form a B. So that means we need to get a C wave since it did break the structure to the upside. And the fib confirms in relation to this retracement that, okay, it's a B wave, almost 90 or about 80 something. Then we expect this one to come down and do a triad and break structure to the downside to break this one low. It didn't do that. Then they stalled here. After stalling here, then we were thinking that this one is going up again. We got a reaction after the break of the structure. Then this is where, and I began to tell them that no, that is not what we are seeing. Instead of this being a B, for us to have a C, this C is now giving us like a flat, whereby this is A of a C, this is a B of a C, and this is a C of a C. So we saw that. And the extension here, relative to this wave, is actually 127. Just like I was showing you, that we may have that on the daily. So 127, and price came down here to do an 100 retracement, to the downside, which picked the low here again, and now this is what we are seeing. On the 4-hourly, this is a good price action for us to buy. And with this, I can tell you this is the last low we're going to pick here to break structure to the upside. So if we do that, we're going to go up and see if you're going to test 123 of the daily structure or 127 of the daily structure upside to know if we're going to come down and break our structure to the downside again or not. So we are going up gradually and we'll be shifting. So for now, on this, I think for the whole of May, we are going to see ourselves breaking more to the upside and to see if we are going to have that correction of a C, daily C to the downside or not. Now, if you go on the 1 hour, how do we know that something is really, bullish? So you can see the way it went up here, which means it's strong. It came down strongly and it took time. It couldn't break structure, went up and down again. And see the way, how many candles here, from here to here, 1, 2, and they burnt down here. They have wind down here on the structure completed, and they went up. So you can see this candle, and you see in relative to this candle, this one candle, see the way the price has came down so far on Friday after this move. They are doing a correction, so which we are seeing now. Now, on this structure, so we said this is like A, and all of this is a B. And so you see the way the B is crawling up here. Before we had this one to be a C, that we expect it to come down. And you may have expected that this one is going to come down, but they change it here. I think I had another entry around this point. Yes, I had another entry around this point. They changed it here. They didn't do a shallow B to project down to C, but they now made this an A, made this a B, the whole of this a C. Now, the whole of this one that is a C, I want you to see what the price did. For this all of a C here, which is the last leg of ABC. They came down, the first part of it as an A, which terminates here. Then they now did another flat, A, B, and a C, which is in the middle to form the B wave of it. And the last wave of it, which is the C wave of the C leg, came down in 5 waves, which is expected anyway in that flat. Which is 1, 2, a 3, a 4, and a 5. And this one is picking up. Now, this is seen most likely as the end of wave 1. On the 1 hour time frame, we are going to see a wave 2. Now, which anybody can pick entry. Now, bringing out on the 30 minutes time frame, Okay, before I do that, let me print out my drawings. And this is what I've said so far, you know, on the 1 hour time frame. This is what I've said so far. And this is 1 and a 2. This one is off the table because it didn't really form. It was not progressive. So it's actually a correction of ABC. And this is like A, the O move here. This is A, B, a triad here, which is a flat, and it's A. Then we have A and a B in the middle, and a C to form a B red, a B red. There's supposed to be a C in the red. If we had had a C in the red, that probably would have pushed lower. It has to be giving us a very aggressive move to the upside. But we didn't get that until, except here. And we got here, this one looked incomplete to the downside, and it went up here. So it became an A and a B, whereby it became a running flat. A to the downside, B to the upside, a retreat, an extension of 127 or 123. Then when I saw that, I said something had changed in structure, that this is going to give us a retracement to the downside of 100%, which we got here. So in fact, the blue box was between this line and this line. I just cleared it off, that this place is not valid for a blue box again. If price should come down and break this structure, the low here again, I think we should just close our trade. I don't expect that to happen really, based on the structure I'm seeing. And we are seeing that the completion of C in the red is complete, and C in the blue also is complete for this triad A, B, and a C. And for in the red, for A, B, and a C is completed. The way we count wave, that's the way we count it. Not until you get to understand it, it will be like we are speaking German. Now on the 30 minutes time frame, so let's see. So on the 30 minutes time frame now, this is where we are. I'm not going into this again. I've explained that. On the 30 minutes time frame, we can see what we have here. What we have here is now an impulse that has broken this structure. This structure has been broken. So when you break a structure, it's telling you the part of the wave is complete. We have completed the count here, so we could just only lift up. Now the reaction started from here. If the first reaction was this place at this point, if they back down and they broke to the downside, that means we are going down. So that didn't happen. It's a very vital place yesterday that would make a decision of what is going to happen to the dollar. So, but the dollar got weak, and eventually we broke 4 of this wave to the upside, and that confirms that we are going up. So what I said before, like this one came down, which is the A part of it, and the B part of it, which did A in the blue. So this is A part of it here, and the B part of it did A in the blue, B in the blue, and the C in the blue, which is the B wave of this triad, okay? And I explained so many things yesterday. And a C wave to the downside, you know, this one came down as wave 1 here, and we have a wave 2 here of that one, and the wave 3 is at this level where we had the black going up, this black going up here. So this green group reaction here, this is the 4th wave correction, and the 4th wave and the 5th wave ended here. Immediately the 5th wave ended, we saw a reaction, and this one is going up now. Now, if you want to count the incident structure of this one, probably you'll get it in 5 minutes, which I am not interested in. What I'm interested in now, to see this correction in 30 minutes or 15 minutes, to see how we're going to get a wave 2. And how it's going to give us is, you take your retracement tools from here to here. This is a 50% retracement. We expect at least 61% retracement. So price may still come down to 1.09939 or thereabouts to peak liquidity here. But most at 76.4. Price should not go beyond that. In case of trouble, this is the last place for wave 2, which is at 85.4. So 85.4, which is 1.09750 is the last place. 750 is the last place that we should find price. And you can put your alerts at these levels. Once it gets here and is breaking it, is most likely will break low. And that is something else. That means we have to get out and close probably all our positions if that happens. But based on this structure, we shouldn't see that happening. We should be lifting to the upside. We should break this trend. Once we break here, that might be an A completion of A on this time frame to look for B and to look for C before we turn up. That is what we are seeing. So those ones are just marked, pre-marked for us to see what is going to happen here. I'm beginning to see a desire for price probably to go up here, do a B leg of this particular correction that is coming down. So a B leg, once it probably, if it did a B leg here in the blue, we may come down to finish the A properly, around this area. So if we finish A properly around this area, we may turn up to do a B and a C, or that this may just complete your A leg, in this corrective format. This may just complete your A leg. If you did an A leg here, you may just pull up to do a B, come down to do a C around this level you pick, then you go up. Anything is possible. It depends on the kind of correction format or corrective format that it wants to pick here. If they want to do a zigzag, we'll get to see if it's going to be a zigzag, But this is the level, this is the blue box area here now. This is the blue box area here now. Between the 50 and a 76. In fact, I won't even use that place as a blue box, because if it's going to be a wave 2, I'd rather use between a 61.8 and a 76.4 down here as a potential blue box area. So I'd rather use that as a blue box area. So for more upside. And this is the area that price should not break before we turn to the upside. So, but if price did 50, price could actually do 50 and go, but the structure will tell us if they're going to, go deeper or not. All right. So let me end here. Please like this video, comment, share the video, subscribe. Let the community grow if you like what I'm doing. Thank you.